What is going on, guys? It's Thomas here, and today we're going to be discussing the brand new First Home Loan Deposit Scheme. This was a new incentive implemented by the federal government, and it targets low to middle income first home buyers with a low deposit wanting to enter the market. So basically how it works is that if you have between a 5 and a 20% deposit, the government will pay your lender's mortgage insurance. So lender's mortgage insurance is an insurance scheme by banks, and it's basically to ensure the bank that you won't default on your loan, and this price is paid by the purchaser. So if you're buying a property that's worth $600,000 and you've got a 10% deposit, you'll also be paying lender's mortgage insurance of around $12,000. But with this new grant, if you apply and you are accepted, this $12,000 expense will be covered by the government. So in total, the savings can be up to $25,000. So with the stamp duty concession and the existing first home buyers scheme, it's savings of over $50,000. So it's pretty significant. And the reason behind this was to help first home buyers gain a foot in the market, especially after the increases in prices we've seen over the last decade, and helping first home buyers to gain that foot in the market and buy their first home. Now, we'll cover the requirements of this scheme. There are some certain requirements that you must comply by to be accepted for this. And the other interesting thing is that there's only 10,000 applications accepted per financial year. So there isn't many applications out there across the whole of Australia. That's why they've added in some pretty significant requirements for those who are accepted under this new scheme. So the requirements for the scheme, number one, must be a first home buyer. You mustn't have any other interest in any other property without Australia. The second one is in regards to your income. So if you're a single, you must be earning less than $125,000 per year. And if you're a couple, you must be earning less than $200,000 per year. And the other thing is that you must live in the property. So it can't be used for any investment purposes. You must live in the property throughout the entire period of the loan. If you do decide to rent the property out in the future, then this scheme would become null and void, and you'd have to pay the remainder of any mortgage insurance if you still have less than the 20% deposit on the property. The next thing is we'll cover which properties are included under the scheme. To start with, these properties must be less than $700,000 if you're in a metropolitan area. So it's areas such as Sydney, Western Sydney, Newcastle, Wollongong, any kind of areas with a population of over 250,000. And I will include a link below which will have a postcode match, so you can chuck in your postcode and see whether your postcode and area is either under the 700,000 bracket, or if you're in a rural area in New South Wales, then it must be under 450,000. So the link below, you can put your postcode in, and that will give you all the details for that. The next requirement is that it must be either an established home, or it must be a home, if it's off the plan, that is ready to settle within 3 months. So after you have signed the application and you're accepted, the application lasts for 3 months. So your place in the 10,000 would sit there for 3 months. So your property must settle within that 3-month period. That's pretty much it, guys. It's pretty simple. First home loan deposit scheme for low to middle income first home buyers, properties under 700,000, and for singles and de facto and married couples. That's it, guys. If you have any further questions, I will be including a blog below as well with a bit more details, and feel free to hit me up if you have any other detailed questions you'd like to ask. Thanks, guys. We'll catch you next time, and enjoy the rest of your day.